Hi all. So the Bajaj Housing Finance IPO happened very recently and the market went absolutely crazy. If you're looking at the IPO price, it was set at 70 rupees per share. But on the day of listing, the stock got listed at more than 140 rupees per share. And again further, in the next 2 days, it even went up to 190 rupees per share. And here we are in between all the news, all the articles coming in where people are asking, is it still a good time to buy the Bajaj Housing Finance stock? And especially now that the stock has corrected more than 15% from its all-time high. With all the fear of missing out in the market, that is a FOMO in the market, I feel a lot of people are still waiting for a fresh analysis of the stock and if they can buy it at the current levels. And that is what exactly this video is about. First, we'll quickly go through a simple fundamental analysis of the stock. We'll understand what the company does, why it did its IPO, and a quick look at its financials. Then we'll go ahead and look into a SWOT analysis, which is called a strength, weakness, opportunities and threats analysis. And we'll look into the way forward and my opinion on the stock as well. And do stay tuned till the end of the video because I'm sure you'll be getting a lot of value from this one, right? So make sure you get subscribed as well to the channel. So without further ado, let's get started. The name is Ajay Ajith. Welcome to Market Feed. So yes, as you can see in the screen here, the question that we are trying to answer is Bajaj Housing Finance. Is it a good time to buy? After the IPO, the valuations have changed and it is now a 1.3 to 1.4 lakh crore valuation company. It's a large cap company. But also from its all-time high, it has fell more than 15 to 20%, right? So it looks like an interesting situation where the stock is at right now. So we'll go ahead and look into it. So first we'll look at why the company did its IPO. We'll go through 3 points and I'll tell you the one secret reason that they were forced to do the IPO and hence why I think this is an important or interesting stock. So make sure you go ahead and listen, right? So the first reason that the company said is, yes, raise funds for the company. Amazing, right? Doing an IPO, you can do a fresh issue of shares and the company gets thousands of crores to make sure that or which they can spend for marketing, for growing their business, for hiring better personnel. All of this can be done with the funds they raise from the public market. That is an obvious first objective here. The second is value unlocking for Bajaj Finance, the parent company of Bajaj Housing. Yes, it gets a lot of value unlocking as well. So the Bajaj Finance company also got a small exit from where it was earlier holding 100% shares of the company. Now it is only holding 88%. So it got a few thousands of crores it got through this IPO as well, right? And it also has a lot of majority stakes still left in the company, which could be unlocking value for the potential shareholders of Bajaj Finance. And third is good marketing for the company. See, we are here talking about it. I'm here making a video about it. You're here excited to know about the company. What does all that mean? Everyone in India, at least every stock market investor, I'm sure would have heard about this IPO in the last 1 month. That is how much excitement and free marketing it generated for the company. So do have a thought about that. But keeping all of this aside, the real original reason of the IPO is in 2021, the RBI came out with a certain rule which said that all upper layer NBFCs, those are NBFCs which are too big to fail, they have to compulsorily list in the public markets, right? And that is why Bajaj Housing Finance has to be or had to be listed in the Indian stock market. So exactly for that reason, I feel it's like a hidden gem that the company did not want to give out or make public, but they were kind of forced to do it with the regulations. So that makes it a bit more interesting than it's supposed to be. Right? So let's go ahead and look at what does Bajaj Housing Finance do very, very quickly. So it's a non-deposit taking NBFC dealing with housing related loans. So that is very clear from the name as well. It is mostly into housing related loans. We'll go through the asset mix also, but it's mostly into housing related loans. But what does non-deposit taking NBFC means? It means that the company cannot take FDs or cannot take money from the general public. It can only lend to the general public. So the question is, how does it raise money? How does it get money to lend back to the public? So it will have to do it through issuance of NCDs or certain bonds, right? So the company can do bond issues, they can raise debt, and then they can give it out as loans to the public. And it is the second largest housing finance company in India in terms of AUM, just behind LIC Housing Finance. So that's also an interesting comparison. We'll get to that towards the end of the video. And here, yes, again, it is classified as an upper level NBFC by the RBI, which kind of means that it is too big to fail. Its failure can have a very bad impact on the economy. So they are put into some tighter regulations. So that also I feel is good for the company over the long term. So yes, going forward, right? Just to see where does Bajaj Housing fit into the other Bajaj group of companies, you can see that this is where Bajaj Housing Finance comes in. Its parent company is Bajaj Finance Limited, whose parent company is Bajaj Finserv Limited, and all of that is being held by, again, a public company called as Bajaj Housing or Bajaj Holdings and Investment Limited. Again, this is not much to learn or think more about. I just wanted to show you the graph because you should understand that it has multiple layers of listed company above it, right? So that's one thing that you should have in mind. So yes, going ahead into the company's track record. So it has a strong brand of Bajaj, right? Absolutely undisputable that Bajaj is a huge family in India, right? It has a huge business across automotive, across, let's say, lending, consumer lending. So it has a huge portfolio. I'm sure a lot of people would know the name Bajaj itself, right? So that's giving it some credibility and some strong brand value. And when we are looking into the company's track record even further, it has the top credit rating in India for long and short-term borrowing. What does this mean? Earlier, we said that the company has to raise money by issuing bonds, right? So while issuing bonds, only if you have a high or the top credit rating can you issue bonds with a low coupon rate. So your cost of borrowing goes down with this top credit rating. So that's also a good thing for the company, right? And if you're looking at the last 3 years revenue as well as net profit numbers, the company is growing really fast. So 34% CAGR growth in net revenue and 38% CAGR growth in net profit over the last 3 years. That is an amazing number, especially for a company of this scale. Also, it had the lowest GNPA, that is a gross non-performing assets and net non-performing assets in FY 2024 comparing to all of its peers, right? So what does that mean? It means that the quality of its loan book for now is really good. There are not much bad loans being in the books of the company comparing to any of its peers. So that is also a good thing. It also has a highest provision coverage ratio amongst all of its peers. Again, what does that mean? So banks or NBFCs or any lenders, they always have a provision coverage amount that they keep aside for bad loans which could happen in the future. So comparing to all of its competitors or all of its peers, they have a high provision coverage ratio as well. Then comes the revenue and profit charts of the company. So as we can see, the revenue has been on a steady increase, going from 2,646 crores in 2020 to more than 7,600 crores in 2024, right? So that's more than a 3x increase in just a matter of 4 years. That's really good. The profit has also seen nearly or more than a 4x increase over that time frame, right? 421 crores is now sitting at 1,731 crores. Again, do keep this in mind because this will come in handy when you're thinking about the valuations of the company. How fast it is growing will definitely affect how you should be thinking about the company going into the future. So make sure you have this in mind. So yes, this is the gross and net NPA numbers of the company. So as you can see, it's in a table format here. It's taken directly from the draft red herring prospectus of the company. So you can see that over the years, it is maintaining the ratio at a very good level. So 0.31, 0.22, 0.27. Yes, in 2023 to 2024, it has slightly increased. The net NPA, the gross NPA has slightly increased, but it is still below the 2022 levels, right? So the company is overall only improving over the last 3 years. So that's also really good to look at. So the next thing here is a net interest margin of the company. So I'll explain net interest margin in very simple terms. So how does a bank make money? Let's start with that example. So the bank gets money through fixed deposits and other deposits. They give their customers some interest on top of that fixed deposits. So they take all of that money which the customers gave and they start giving it out as loans. Again, I'm simplifying it just for the sake of understanding, right? So what really happens here? The bank is paying out an interest to the customers who put the FDs, and the bank is collecting interest from the customers who are taking loans from them, right? So the difference between the interest rate that they're paying out and the interest rate that they're charging their customers is called as net interest margin. Again, very simply. So even in the case of Bajaj Housing, they issue bonds at a certain interest rate and they give out loans at a certain different interest rate. So the net interest margin is calculated by a simple difference here. And you can understand that the company has shown a healthy net interest margin, even if you're comparing to its peers, 4% in 2022, slightly increased in 23, but again fell in 24. It's now at 4.1%. For perspective, right, I'll put a table here which shows you the comparison between LIC Housing Finance, which is the largest in this housing finance segment, right? And they're having a slightly worse net interest margin, surprisingly. So that is something that you should know about. Bajaj Housing has a good, right, when you're comparing with the industry, it has a good net interest margin percentage. So make sure you keep that in mind. So then, yes, you got to understand some basic, quick fundamental analysis of the company here. Now, let's get into some opinions as well as some understanding or analysis of the stock, right? Earlier, what we did is we just looked at the numbers and we presented it, right? But now we'll go into an analysis part. What do we understand from all these numbers and the businesses that they're doing, right? So when we're getting there, we'll start with the strengths analysis. So what is the first point here? Conservative mindset with strong growth in numbers. What does that mean? Conservative mindset because its NPA levels are very low compared to the competition. What does that mean? That means the loans that it is giving out, it is being fairly conservative, it is being fairly cautious. That is why the non-performing assets of the company are low, right? So that's good to see. At the same time, they're having a high growth. Their revenues are increasing, their profits are increasing. So the company is also having a high growth currently as well. So that is very good to see. Bajaj Housing mostly gives out asset-backed loans which are considered more secure, right? Whenever you're taking a housing loan, you obviously have to keep your property as collateral, and that is how most loans are being given out. So it gives off the sense that the company is more secure here, right? So that's a good thing to see. It has a healthy asset mix comparing to other housing finance companies. So when you're looking at the asset mix of the company, right, which I think is something that is very going really well for the company, that is where I believe the strength of the company is. So towards the end of this SWOT analysis, we'll go ahead, open the annual report and show you that asset mix as well. So basically it is not just limited to housing loans, right? It has multiple other revenue models, multiple other businesses. Even though they're smaller, they're contributing a large portion of their loan business and they're growing at a rapid pace as well. We'll get to that. And also the AAA rating is helping it raise funds at a very low cost and with the Bajaj brand recall as well. So these are all the strengths of the company. Now, in the SWOT analysis, let's go ahead into the weaknesses section, where the first one, which I personally felt, is that it's a non-deposit taking NBFC and hence it will have to pay a small premium to raise funds. So I'll give you an example here. Let's say an HDFC is giving you an FD option, right? So how much will HDFC give you as interest for that FD? Right? They might give you 6.5, 7, even 7.5% as interest rate. But if they're going ahead and if they're trying to raise funds from the debt market, they'll often have to have a coupon rate of 8 to 8.5% or even higher. So what really is happening here? Normally the retail customers, they're willing to park their money even for a lower interest rate in FDs. But in the case of raising funds through bonds, right, they might have to pay a slightly higher premium when they're trying to raise funds. That is one weakness that I found out here. And what is our second analysis here? It is saying that the company can't diversify outside housing like other banks or other financial institutions. It can't issue gold loans. It can't issue personal loans. It can't issue loans for consumer durables or even credit cards, right? So for Bajaj, there are multiple companies, listed companies for all of these different actions and they're all competing. So Bajaj Housing is only limited to this property related loans market. So that is one of the weaknesses here. And the third weakness here, in my opinion, is that the company has high asset concentration in 4 states and 1 union territory. So Delhi being the union territory, Telangana, Maharashtra, Karnataka, Gujarat, all these 5 places combined, they contribute nearly 85% of the company's loan portfolio. So that is slightly concentrated. They would want to get out of these 5 states and expand, right? So that is currently a weakness of the company, which they'll have to or might come in as an opportunity for them to correct in the future as well. So then, now that the strengths and the weaknesses of the company are done, let's go ahead into the opportunities of the company. Why should you as an investor be thinking about it? I've tried to list it down here. Right. So the first one is it's absolutely a growing market. Demand for housing is on a steady increase ever throughout the history of India. And again, if you believe in the India story, where you believe that India as a country will continue to grow over the next multiple years, the housing demand will also grow. And hence, companies like this which finance these housing needs, they will also grow. Right. That is just a basic industry following the economy. Right. So that I feel is a really good thing or a really good opportunity for Bajaj Housing to capitalize on over the next 10 to 15 years. So showing you the annual report here itself, because I think this is very critical for the company, right? So this is the product AUM mix of all of Bajaj Housing and its peers, right? So you can see that for Bajaj Housing, majority of its AUM is coming from housing loans, right? Very straightforward housing loans that the company are giving out. That is nearly 58% of its AUM. But when you're comparing it to Canfin Homes, which is a major competitor here, you can see that it is 78% for Canfin Homes. It is for 85% for LIC Housing, and it is 97% for PNB Housing. Right. So if it is only 58 for Bajaj Housing, where does the rest of it go? So you can see here that loan against property is nearly 10% of their AUM. But this one major thing, right? Lease rental discounting as well as developer finance are really interesting. You should definitely look into it. So the lease rental discounting model is very simple. So let's say you're an Embassy Tech Park or any of the REITs in the country. Right? REITs are real estate investment trusts in the country. So just giving an example here, right? So if any of these companies have a lease agreement with all of the people who they're giving rental units to, the a company like Embassy Tech Park, they can come give that lease agreement and that rental agreement to let's say Bajaj Housing, and they'll give you a loan on top of that. And that has been an absolutely fast growing product for Bajaj Housing. That numbers are really interesting. You definitely should look into it. Not a lot of competitors even have this product even today. And that one single product, it can even be a monopoly, right? Now it is holding 19% or it's contributing to 19% of Bajaj Housing's loan book. So that's a really good opportunity for the company here. So if you're looking at the growth of the lease rental discounting model, right, you can see that in 2022, it was nearly 6,869 crores. Again, this is in tens of lakhs, right? It is in millions. So you can see that it was at 6,869 crores in 2022. So you can see that at the end of financial year 2024, how much had it increased to? It increased to nearly 17,636 crores. That is how fast it has grown, right? But if you're comparing that to the housing loan market, yes, it is still huge, right? Comparing to the other product mix here. But the housing finance grew from 34,544 crores. It grew to 52,819 crores. So you can see that the most of the AUM growth, its rapid expansion has been happening in lease rental discounting as well as developer finance. That has also seen a huge jump here, right? From nearly 2,898 crores, it has grown to 9,599 crores. So that's also experiencing a fast growth. So I believe these two models are the moat of the company. If you're looking at lease rental discounting, it's very fast growing. And if you're looking at the next one, which is developer financing, as the name suggests, if you're developing a huge property, Bajaj Housing will help you get a loan for that as well. So all those new product mixes are contributing a lot to their growth, and that is definitely interesting going ahead into the future. And one other opportunity that we identified here is they can use the reach from Bajaj Finance customers if being shared, right? If the customer data is being shared, considering that it is still a subsidiary, right? If the customer data is being shared, it can be used to grow faster than their competitors, because Bajaj Finance and Bajaj Finserv, they're almost everywhere in India, right? A lot of people would have at least taken their consumer durables loan when they were going to buy an AC. And with that, they've shared their personal data with Bajaj Lending as an arm. Right now, Bajaj Lending, if they're sharing data between their subsidiaries, they can use that to grow their housing finance company as well. So that is definitely an opportunity for the company. Next, we'll go ahead into the threats, right? So a recession can hit both the corporate as well as retail clients. Yes, a lot of their housing finance customers, they're all salaried individuals. So recession, job loss, all of this can hit their portfolio really, really hard. Also with the corporate clients, as we saw with the lease rental discounting model, they can also be hit, right? Let's say a huge tech park is seeing a lot of people going for work from home, right? And the offices, they're shutting down due to a recession or due to any other external pressure. So they'll see that in times like that, their loan portfolio will come under a lot of stress. So that is definitely one thing that came out as a threat here. And the second is that new age tech-based companies can disrupt the space. Right. So if you're looking at this space of the housing finance market, not a lot of new age companies have come there. Personal loans, gold loans, everywhere there are a lot of companies coming in and trying to disrupt the market. But just in this, it's still I would say, very old school industry. Even the process of underwriting, you still have to go to a bank. Or you still have to go to the NBFC's office. So it's a very manual process still, I think, because of the large ticket size here as well. So there is a possibility here. It might be a far, far away one, but still it is definitely a threat for the company, at least in the longer run. So that's something that they have to think about. Again, the last one is 99% plus of their loans are floating rate loans. So what does that mean? So very recently, we saw the Fed interest rate cut happening after 4 years. Right, we have been talking about it for multiple years now, and finally it has happened. So here you have to understand two things. One is a fixed interest rate loan. The second is a floating interest rate loan. So when the central bank of the country decreases their lending rates, right, a fixed interest rate loan does not get affected. Most of your car loan, your bike loan, your personal loans, it might be all fixed interest rate loans. It won't get affected. But all your housing loans, right, those are mostly 30-year-old or 30-year long loans there. So whenever the RBI decreases the interest rate, that means the interest rate being charged to the customers by Bajaj Housing will also immediately get affected. Right. So that is one thing. The US has already decreased it. Now, if in the coming years, the coming months or the coming years, India also decreases their interest rate, the profits and the revenue growth of the company can get hit. Right. Again, it's a short-term problem, not a long-term threat, because that is how the business works. Right. So then we come into the last part of the video, which is, I feel it's a really good company, especially with the lease rental discounting model that it has come up with. When you're comparing with the peers who don't even have that product in their loan mix, right? I feel it's a really good company. It's really interesting. Definitely should be looked into. But when we're coming into the last portion here, the question is, opportunity is good, right? I feel it is good. That's my opinion. It's not investment advice, but what about the price, right? Let's go through the points here. So IPO trend in India is contributing to overvaluation, right? So that's really sad to see that just after an IPO, all the people who did not get the IPO can't do anything about it because the stock lists at 100% premium. It nearly doubles in the course of 1 week, right? So that's really sad to see. Then the next thing is, it's already a large cap. Even with the recent fall that we talked about, the company is still valued at more than 1.4 lakh crore rupees. So it is something that you should not be expecting is a 100x returns like Bajaj Finance gave in the past. If you're looking at Bajaj Finance chart here, right, if you're taking the split and bonus adjusted value in 2004, that is nearly 20 years ago, the stock was at 7 rupees. And now it's a 1000x increase over the last 20 years. But I don't think that will happen in the case of Bajaj Housing, because it's already a 1.5 lakh crore company. Even the largest companies in India only have a market cap of 20 lakh crores, even if the industry expands by quite a lot, right? A 1000x returns might not really be possible. Even 100x might not be possible. But that's something that you have to feed in your mind, right? So that's also really important. And the third point here is the price has given a correction, but still I believe that the valuation is a bit high. And when it comes to the fourth point, again, it's a purely personal opinion, and it's not an investment advice. I feel that the price is high due to high growth in non-housing categories. Right? That is really interesting because that new product mix that I talked about, if there are no other companies in that space, then it's sort of a monopoly for a company, right? So when they're growing really, really fast there, that's an absolute opportunity, and that can in itself justify the higher valuations. Right? That is what I personally feel, and that is why I feel that investors, large investors, everyone are going for higher growth targets for the company. So as the data shows, the company has a very high price to earnings ratio, nearly 78.9 when compared to companies like LIC Housing Finance. It doesn't even make any sense, right? I'll give you a quick run through there. So Bajaj Housing is having a PE ratio of 78. That means it's having a market cap of more than 1.3 lakh crores, while it is making a quarterly sales of 2,200 crores. So I'll try to give you some perspective here, right? So Bajaj Housing is having a net profit every quarter of nearly 480 crores. Again, this is the last quarter's number, and they're having a market cap of 1.36 lakh crore as of today. That means the stock is currently trading at a PE ratio of 78. Right? Now let's quickly just compare it to LIC Housing Finance. Here the net profit per quarter is 1,300 crores. That is more than 3x of what Bajaj Housing is at, right? But the company is only valued at 36,000 crores. That is a market cap. So you see the huge difference, right? The LIC Housing is having a PE ratio of 7.8, but Bajaj Housing is having a PE ratio of more than 10x, which is 78. So with all the data that we have, it is definitely not a value investing stock. If you're looking for value, and if you feel that value will get unlocked across all the multiple years going ahead in this industry, there are a lot other competitors that you should definitely consider who are trading at much cheaper valuations. But if you're looking at growth, right, and if you believe in the growth story of Bajaj Housing, then that is the only stock to go with. Well, that is a reality. Growth stocks will always charge a premium, and it is upon you to decide whether you're okay with that premium or if you're okay with that style of investing. Right? So that's it for the video, guys. I feel it's a really good stock. Again, it's not an investment advice. I'm going through all the fundamental analysis here, and I feel it's interesting enough to have a deeper look at it. So let me know what you thought about this video and how you like the analysis. If you would like to see more of these kinds of videos, make sure you let me know in the comments down below as well. This is Ajay Ajith signing off. See you all again. Bye bye.